Thank you for joining me this Friday, the 2nd of June. I'm Grady, market analyst for Bell Direct, and this is the weekly market update. The artificial intelligence, or AI revolution, has been dominating headlines and conferences over this past week and is the driving force behind investors regaining appetite for technology stocks in 2023. For the week, the technology sector locally rose 4.6% following Nvidia, which is a global leader GPU creation company and driver of advances in AI, gaming and autonomous vehicles, became the first semiconductor company to hit the $1 trillion market cap club, joining the likes of Apple, Alphabet and Amazon. While many investors believe technology is the major beneficiary of advances in AI, there actually are other sectors that will see incredible transformations from utilizing AI within operations. The two key reasons for introducing AI into operations are for enhancing operational efficiency and output, and to enhance the customer experience with any company. Understanding that, let's dive into some key other areas and sectors that are investing in AI to achieve these outcomes. In the healthcare sector over recent weeks, we have seen key developments in the expansion of AI through acquisitions and funding allocated to introduce AI into key systems. AI use in the healthcare sector is extensive, from reshaping the way patients are diagnosed to earlier diagnosis to enhancing drug development and more. It is proving to drastically change the way healthcare companies operate. Telix Pharmaceuticals, ASX TLX, is one name venturing into the AI space through its recent acquisition of Vienna-based Dedicaid GmbH, a spin-off of the Medical University of Vienna. Telix's acquisition brings on board Dedicaid's core asset, the Clinical Decision Support Software, or CDSS, an AI platform which is capable of rapidly generating indication-specific CDSS applications from available datasets for use with positron emission topography, or PET, and other imaging modalities. What this means is that CDSS application is trained to predict outcomes such as the severity of a disease, risk to patient and/or inform of treatment decisions according to Telix. And that is the healthcare sector. And with retail spend declining as the cost of living pressures grow with every rate hike announcement, it's been a tough time for consumer discretionary stocks in 2023. Some are using this time to invest in AI to improve the online customer experience, while others are utilizing AI to consolidate mundane human processes to allow retail employees to focus on customer relationships rather than the tedious, time-consuming tasks. Temple & Webster, ASX TPW, revealed in its May trading update that it sees significant potential for AI to drive both conversion and customer benefits, along with productivity gains to lower its overall cost of doing business. The online furniture retailer said to accelerate the use of AI in operations, it recently increased its investment in Renovate, an Israel AI startup company focused on digitizing the interior design process. The integration of ChatGPT also into Temple & Webster now powers all pre-sale product inquiry live chats, and TPW has used AI to generate enhanced product descriptions across all 200,000 plus products on its website. We are even seeing the mining giants delve into AI utilization to epitomize processes, cut capex, reduce carbon emissions, and eliminate human error-driven incidents. Resources giant BHP, ASX BHP, invested millions into Brisbane-based AI technology scanning company Plot Logic in a Series A funding round back in 2022, while lithium giant Pilbara Minerals, ASX PLX, employed Plot Logic's OreSense technology in 2023 to improve identification and reduce dilution of ore and waste materials, leading to an increased production of lithium at the mine. The use of OreSense also helps to reduce a miner's carbon footprint through more precise mining of resources without harming the environment. With all of this in mind, when investing in AI, it is important to remember it is not just used in the technology sector, but is operating in almost every sector on the local and global markets. For those companies not investing in AI, retaining market share may become a real challenge in the near future. Locally from Monday to Thursday, the ASX fell 0.61% as investor sentiment was dampened by local and global economic data and events. On the global front, the slow progression and challenging passing of the US debt ceiling agreement through the House caused heightened investor concerns this week, while locally a rise in inflation to 6.8% annually for April led investors to fear potential further rate hikes from the RBA as inflation proves to remain sticky. This caused investors to flee consumer discretionary stocks this week, while healthcare and technology stocks rallied. Gold mining stocks led the charge this week, with Capricorn Metals topping the ASX 200 gains, up 8.8% over the 4 days, while De Grey Mining added 8.5% and Northern Star Resources rallied 6.06%. On the losing end of the market, IDP Education tumbled almost 21% after Canada announced it would accept other language tests for student visas, a market that IDP Education previously held full monopoly over testing in. Sayona Mining fell 14.3% from Monday to Thursday, and Imugene lost 9.09%. On the broader market, the All Ords fell 0.6% from Monday to Thursday. Audio Pixels jumped almost 60% after the company streamed a demonstration of its technology at its AGM. Appen rallied over 33% this week amid strength and interest in AI-listed stocks. And Hastings Technology Metals fell 30.24% on the other end of the All Ords, while Dreadnought Resources lost 14.3%. The most traded stocks by Belterac clients from Monday to Thursday were Deep Yellow, IGO, Computershare, Invocare, Illumina and Allchem. Clients also bought into Pilbara Minerals while taking profits from Fortescue Metals Group, Whitehaven Coal and Brambles. Looking at diversification, the most traded ETFs by Belterac clients this week were SPDR, S&P ASX 200 ETF, Vanguard US Total Market Shares Index ETF AUD and GlobalX FANG Plus ETF. On next week's calendar, OPEC Plus is meeting on Sunday, and that may cause some volatility in oil prices next week as the group discusses production policy following the production cut announced in April. All eyes will also be on the RBA rate hike decision out on Tuesday, with a forecast for a pause in the cash rate to remain at 3.85% for June. However, following stronger than expected CPI print of 6.8% that came out on Wednesday this week, a shock rate hike announcement may be in store. The all-important Australian GDP growth data is also out for the first quarter on Wednesday next week, with the forecast of a drop from 0.5% growth in Q4 to 0.4% growth in Q1. Australia's trade balance is also out on Thursday, with the expectation for a decline in Australia's trade balance from $15.27 billion in March to $14.4 billion in April. Overseas, US ISM Services PMI for May is out on Tuesday, with a forecast of a rise to 52.1 points from 51.9 points in April. And that's all we have time for today. I'm Grady Wolf with Belterac. Have a wonderful Friday, a wonderful weekend, and as always, happy investing.